We had some consumer confidence numbers and various other things happening, right? And I think what we're kind of seeing now is the S&P just kind of getting a little shaky. One thing that was kind of interesting today, if you look at this chart over here on the far left side, you see this gray box. Here, I'll get a little pin out here. Um, so when we start looking at things, Um, we this is basically our week open, our month open, and the year open on the S&P. And we opened up at 59.49, which if you're looking at that, that's right about here on this chart. So we busted below it just briefly today. We opened up the month at 59.82. We're at 59.74 right now. And of course, we opened up the week up at 60.41. So we've been selling off, yes. However, they went down and broke below the month open and the year open. So basically, erased the month and the year. And all of a sudden, they're thinking, well, do we really want to do that? Is it really that bad out there? That's the question, right? So, I mean, that's the crazy thing is, I mean, if they're trying to figure out, do we need to be heading down or heading up? And the S&P's had a real difficult time making new all-time highs. I mean, you can kind of see back over in here where we went up, and we've been just kind of topping out right here around this 61, 65, 66 area, and they can't just seem to bust through it. But another thing you have to think about is back over here on this green bar right here, that's the election. And they've been up since the election, and but it hasn't really been a strong move, as you can tell, right? And we've been up, we've been down, we've been up, we've been down, we've been up and down and up and down and up and down. And it's just back and forth and back and forth. And it's really hard to find stocks, if you will, saying, hey, let's buy this one. Well, that one gets killed, but this other one over here has done really, really well, right? So, and that's the thing that I've been kind of watching here is just how much they're pulling back and going back and forth. And I mean, you're starting to hear companies. What was it yesterday? We had Starbucks come out and say we're going to let go 1,100 people, but it's all in the corporate side of things. I don't know if that's just strictly out of Seattle or just corporate around I mean, the managers and all that good stuff just around the United States. I mean, I didn't read into it, but they did say it was the, corporate people. So I guess the people that know the Starbucks here down the street, they're fine. It's just some other ones. But you've seen that out of Southwest Airlines. You've seen quite a few companies starting to peel away on their employment. Not only that, so I know everybody's heard that government's doing the same thing. So we're starting to get a lot of people out there into the workforce again. So might be something to watch for this Thursday. See if the initial jobless claims numbers and the continuing jobless claims are starting to increase. And it might be this week and it might be going into next week, but we're going to start probably seeing that starting to get bumped up, which basically says, hey, the economy might be cooling off a little bit. Of course, we've had inflation, and I actually reading out a thing out of the Wall Street Journal this morning that they've been kind of keeping track of what's the best way of putting it? Who's buying stuff? Let's just put it that way. Make it real simple here. And back in um, you know, 1988 or 1989 when they started keeping track of it or whatever it was, that 36% of retail sales purchases um was by the top 10%. Now it's at 49.7%, almost half um, of all purchases right now are by the people who are in the top 10%. And I think that's people over $250,000 in income or something like that. So those people are still out buying. They don't care. Um, but it's everybody else who's been really, really pulling back here. And if they continue to do that, just because inflation is really biting people a lot, um, then we're probably going to start seeing things slow down and slow down and slow down. We've had high interest rates, which has kind of put a damper on the housing market, and people not wanting to buy houses. I've even noticed down here along the Gulf Coast that houses sit longer, even though they're selling. Um, they're sitting like 46 days as opposed to like 15 or 19 days. But the average house is outrageous. I mean, the average house in there's a county right next to us. We call it across the bay, where Gulf Shores and all those beaches are. The average house over there, this run of the mill house in that county, is $426,000. Just like that's just crazy. And there's no different houses than over here in Mobile or anything like that. The houses look basically the same thing. It's just they're wanting to move over there for some reason. So, but I do know that a lot of people are moving from Florida over into that county because it's right next to Florida. It's called Baldwin County. And a lot of people are leaving Florida into there just because it's a whole lot cheaper to live there than it is in Florida. The housing and everything like that in Florida is really high. So people are starting to shift a little bit to, places that are a lot cheaper. And I think that's kind of weighing into the marketplace here a little bit. And right now we're kind of, if you look at the range, let me get rid of all this stuff here. If you kind of look at the range that we've seen since the election here to here, there we go, bing. This is, this sell off into here and then starting to bounce back up. Of course, we never did make it back up to here, but this is your 50% retracement area right in here. And yesterday they kind of come down and tagged it, and now we're kind of trading a little bit below it. And he actually took out the 38% bounce back up here. And if we just reverse that, I guess we can kind of see what that's like. Let's just do that real quickly. We'll reverse this out here. And we'll go from here up to there. There we go. So if we're looking at the bounce off the low here, then basically this is your 50% line, and here it is, your 0.618 and everything like that from these highs. So, but anyway, they're still a little bit beyond that 50% range, regardless of what you're looking at. And now we get to kind of see what they're going to be trying to do here. Do they really want to take this thing lower? And my guess, if we close below that 59.50 in the S&P, we're going to see lower prices. Another thing that I've been kind of watching, and let me get rid of all this stuff. Another thing I've been watching, of course, is good old gold. Last week, if you saw it, they kind of dumped gold off. They flipped it right back around. Actually, it was week before last, wasn't it? No, it was a week ago last Friday. That's what this bar is. They sold it off. Then we had a holiday, and then on Tuesday they rallied it up, and so they went right back to where they were. And now they've come right back down to that 2,900 area again, and it looks like they're trying to hold support in here. And probably odds are they'll come right back up to this 2955 area, 2950. They've been just kind of hovering around that 2950, as you can kind of see with all those bars just open, closing right around that 2950 area. So it's kind of like a good little pivot point. They even popped up and made a new all-time high. That was overnight, by the way. And one thing I've been kind of noticing also is they've been rallying gold throughout the Asian and European markets, and then when we get to the U.S. markets, they sell it back off. And basically our sell-off today was during our day market here. So it's like the U.S. gold traders want to sell it off, and the rest of the world wants to rally it. But we're still in a nice, decent uptrend. Don't get me wrong. Gold is still very strong. Silver is still pretty strong. Even copper is holding up pretty well. But we're just getting into more and more and more volatility. And so, but yeah, that's the thing when we're starting to kind of look overall at the markets. Even crude oil has had a nice little correction. If you look at it real quickly, there we go. Here's old crude. has been kind of in a little downtrend. Um, Canada right now is reworking their pipeline between Alberta and British Columbia to go out to the Pacific so they can be open to more markets. We import um, of all of our imports into the U.S., over half of that comes from Canada. And of course, we take it and we pipe it down to like no Texas City or whatever it is, Bay City, Texas, and then we send it out from there. And with the tariffs coming in against Canada, they've been thinking about sending things over there. And what's really interesting, this is even after what was it, last night or yesterday or day before, whatever it was. Trump came out and put more sanctions on Iran, which is going to really kind of crimp their style as far as exporting oil, trying to get money and everything like that. And that really didn't affect crude oil all that much. So now the question is, are we going to have too much crude? China has also come out, and they've put tariffs on our energies, our natural gas, our crude oil, and all that good stuff, gasoline. So they put tariffs on them, just tit for tat here. And so that might just kind of slow down. So our surpluses might start increasing, which would probably be fine because I'm sure they're wanting to fill the strategic oil reserves. And what a better price than, as low as we've been over the past, I don't know, 6, 8 months here. So might be a good place to start kind of filling it back up again. But anyway, but we've got just about everything trying to pull back somewhat. Though gold is still in a very nice uptrend, S&P is still up. I mean, you think about going back, 5 years, and it was way back there, 4,000 as opposed to 6,000. So it has gone up. We were up somewhere around 20% last year. So, and the first quarter of just about every year is kind of shaky anyway. Everybody's trying to figure it out. Plus, we got a brand new administration. And I think we just need to be kind of a little bit patient and calm here. I think if crude oil busts below $65, we might be heading back down to $35 on crude. But right now we're kind of weaving back and forth. But I think more than anything, crude's going to be weak. I think it's going to stay weak. I don't see how it can strengthen up. I mean, if you look at what the administration's through all agencies is basically open up the public lands and let's drill baby drill, basically is basically what he's put in his executive order or whatever those things are. So but that's really what you're seeing right now when it comes to, I think the crude oil guys are starting to worry of we might be getting into a big glut in oil again. So the gasoline's still holding up real well. It's not selling off with crude right now. It's down a little bit, but it's holding up very, very well. I mean, it's still somewhere around the 225, 230 a gallon area, even though crude's pulled back, what, $10 here almost. So, but I think we'll continue to see some volatility in the gold market in the S&P. And it might be, kind of wise just if you have a portfolio or something like that, is to go out, a couple, 3 months and buy some, SPY puts or something like that just to protect things. And, go out, I don't know, go out $20 or something like that. They might be kind of expensive, probably around $7, $8 a piece. But at least you'll have a hedge on just in case that the S&P does kind of die off. At least you'll have something protecting your portfolios. But right now it's kind of looking that way. But as long as we stay above the year open, I'm still more positive than negative in the S&P. But we opened up the year at 70.97 in crude, and we just kind of busted it today. So we'll just kind of have to be patient and watch and wait and kind of see where things go from here. So, but kind of a lot of stuff to look at, I know, but kind of what is spinning through my mind right now and across all these markets. I was doing a class this morning with my EIT, energy income traders, and we were just talking about this, that, and the other. And when I got off of that and flipped over and looked at the market, I was like, oh my goodness, they really sold this thing off. So just in the amount of time we were in there, they had really sold the market off pretty hard. And I guess the consumer confidence numbers were, a little bit better, but I think we're still going to see some volatility in the gold market in the S&P. I think below expectation. That thing's supposed to come in at 103 and it came in at 98. I think that's really kind of what accelerated things. That consumer confidence kind of waning a little bit. So, but anyway, we'll see if confidence increases or decreases or what this economy is going to do. But even Trump said the first several months is going to be kind of rough. And well, looks like the market's going to agree with that. So, but anyway, there's any questions, let me know. Otherwise, I will kind of wrap things up here. All righty. Well, thank you all and have a great day. Be back on Thursday, kind of see what the uh, numbers do in crude oil and stuff like that tomorrow morning. And we also get PCE and GDP and stuff like that. And we still have a bunch of earnings. What Nvidia's coming out tonight, right? Or is that tomorrow night? So that's tomorrow night. Okay. So it'll be interesting to kind of see how that churns out, right? So natural gas. I think you're going to continue to see. Tom was asking about natural gas here. Um, a continual demand on natural gas. We're still needing energy, and we don't have. I mean, you just can't go. Now we have a new nuclear plant here. Um, so I think there's going to be a huge demand on natural gas. There has been just because of the cold winters that we've had. But I think there's going to be a continual demand on it just because of the energy needed. They're actually opening up coal plants right now to kind of help supplement that. So, but I think we're probably going to see a continual need for natural gas, and there's going to be a big demand on it. I don't think it's going to get pulled back like you've seen the pullback in crude oil. I mean, we just ran up, what was it, 160% in natural gas, is around in there somewhere. And if it pulls back a little bit, it probably needs to, just because it's had a huge run. But I wouldn't be surprised if it doesn't stay above $4 um, and kind of hits that and kind of hangs around there a little bit before bouncing back up a little bit. But I think natural gas is going to be high in demand just because, I mean, right now, I mean, if you look at just the past several years, about 48% of our power is from natural gas anyway, for the natural gas turbines. And I think you're going to see a whole lot more usage out of natural gas and a lot bigger demand. Plus, um, we're exporting a lot of LNG now. Even though Biden shut that down, it's been opened back up, and we're starting to export a lot of LNG over to Europe to supplement them because of Nord Stream went down. So that's the thing. I think we're going to be have a high demand on our natural gas, and we got a ton of it. So why not? There it is. So my thoughts on Nvidia. I don't really care about the earnings, whether they're good or bad or ugly or anything like that myself. Now after the earnings, I'd like to see what the stock is doing. But I still think there's big demand on Nvidia chips. I think there's going to be for a long time. I mean, they're still coming out with new chips and new chips for this AI stuff. And I think Nvidia is probably going to continue to hold up real well, even though, like we saw back in August, it got hammered. But it turned right back around and took off again, right? And it just had a huge run and needed a correction, and it got it, and there it went. And it wouldn't be surprising that they might not use this, these earnings. They'll usually use the first quarter earnings to say, look how crappy we are. We're not going to be doing very good, just like what Walmart did. We don't think our sales are going to be all that great. So they get slapped down a little bit. And that way they have kind of a bottoming in there, and then they can turn back around and take back off again. I mean, if you look at the Walmart now, I mean, it still is looking pretty good, recovering wise. So, but I think you might see a lot of that especially with these chip guys and everything like that. They might just put their bad stuff out. I mean, they just bought somebody Ballard or something like that. So that might be their excuse to say, well, they drug us down on this one, but we'll be getting better the next quarter. So just beware, there could be some rocky road in there. But usually NVIDIA does pretty good on earnings, so I would expect them to continue to do well on earnings. There it is. So, yeah, and I'll agree with that, Edwin. GE still can't deliver turbines fast enough. Yeah. Like I said, there's going to be a huge demand on natural gas, and they're really going to start using that. If they can, I don't even know if they have frame threes anymore. Tells you my age. That's what I used to work on turbines. Um, but uh, but anyway, they'll need to start getting them out. And I know that they've actually started using some of those Rolls Royce engines and stuff like that as well. So, but anyway, alrighty. Anyway, thanks for tuning in and thanks for being here. And we'll be back on Thursday to kind of see what NVIDIA did and what crude oil is going to do and all that good stuffings. So, but you all have a great day and we will see you soon.